It's Monday. I have been asked by a few people about gold last week, so I'm going to run through gold, give you some longer term trade ideas, short term trade ideas. I'm going to start on the weekly chart. We're actually going to have a look at the monthly chart. Then we're going to have a look at the daily chart and the hourly chart, and we're going to try and break down what's happening with gold, try and give you some clarity. It is a confusing picture. When we look at the weekly chart, I'm going to put some Fibonacci levels on here, which I do like to do, as you know. As you can see here, we do have a potential triple top pattern, which I did alert you to in May when we formed the third peak. Now, what I need to do is have a look at the monthly chart to put on some longer term fib levels and to also have a look at those candles on the monthly chart just to see if they are quite negative and if we should be paying more attention to this triple top pattern. So I've gone all the way back to the low of just below $252. That was $19.99. So we've had a heck of a run up. I've just put the Fibonacci levels on, and as you can see, the 23.6% fib is at 1,643. So nicely held that on this dip. We'll look at that a little bit more closely now on the monthly chart. Do we have any negative candles on the monthly chart which indicate that there is some validity to this potential triple top pattern? The first candle, a doji. So more of an equilibrium, more of a balance there between buyers and sellers, indicating that sellers are matching the power of the buyers. And then we had a little dip and a good recovery. Then we had a slightly more negative candle because we've got a long upper wick and the body of the candle is right at the bottom, a shooting star type candle. The market did then plunge quite significantly. In fact, 6 months of decline followed that negative candle on the monthly chart. So it was a good indicator. Potential double top, of course, negative candle, down we went to test the 23.6% fib at about 1643. A good run up. And this candle certainly confirmed the fact that we were going to bounce off the 23.6% Fibonacci support level. And the close of that candle on the monthly chart was above the previous two candles. Good run up. And eventually we retested the previous high. Now, triple top patterns are quite rare, so I wasn't necessarily expecting that to hold, but we did. And if anything, we got the most negative candle of the three because we have the long upper wick. We've got the red body on the candle, and already on the following month from May and June, we did turn down. Now I've got some shorter term Fibonacci levels on there. So let's go to the daily chart and have a look at how they are working. So I've taken the second set of Fibonacci levels from the little triple bottom that we had around September, October, November. Triple tops, triple bottoms are extremely rare. So it's surprising to see three potential triple patterns here. We did start jumping into a long position when we moved above 1675. If you were following me or subscribing to me, we had a real good run up in gold. That was a really nice signal, really nice pattern. Then we had a little retreat to the 500-day moving average and the 100-day moving average, the green and the blue line took off again, another leg higher. Now, what have we done recently? Okay, we don't have a negative candle on the daily chart particularly. So if you were only following the daily chart and you weren't looking at the weekly or the monthly chart, you may not have been aware that we could turn lower from here. There wasn't any particular indication that we were going to have this correction to the downside. Even if you did know, even if you did bet on the triple top, it would have been a struggle to hold a position, quite frankly, because we just spent long periods of time trading sideways. We really did hold that 100-day moving average as a support level. Then we broke down, and the obvious target was the 23.6% fib at just below 1898. We dipped as far as 1893, but a more balanced candle, almost a gravestone doji. Buyers were clearly coming in around that level, but we haven't taken off since then. So what does it mean? Well, I think we should put some trend lines on at this stage. I think I'm probably going to do something along the lines of that. And then I could even put in this, could I? Yeah, I think that's reasonable. Okay, so with these trend lines, it indicates that we have a declining wedge pattern. Now that's actually quite bullish. So in the short term, at least, that contradicts what I'm seeing on the weekly and the monthly chart, which is a bit more negative. The moving averages are flatlined on the daily chart, so they're not much help, but the blue 100-day moving average could be resistance on the way back up. It certainly was a good support level on the way down, of course. That's at 1948. If I was to draw a trend line joining the recent peaks, something like this, you can see that, well, maybe we're going to be stuck in a channel from 1935 down to 1900, 1895. It's possible. But with the declining wedge pattern, we could have something more bullish. I'm going to go with the bullish scenario, but I'm going to need a break above 1935 to confirm that we have actually broken out of the declining wedge pattern. If bulls were jumping in on the move above the trend line, which was around 1923 on Friday, and they thought they had a buy signal, they would have been a little bit disappointed because we've pulled back today. Because we're mostly unchanged and the trend line is declining, that is more bullish, and it confirms a breakout to the upside. We haven't accelerated higher today yet, but maybe we can do later on in the week. We will, of course, have to stay above the trend line, which has a value of around 1921, 1920. If we can hold above there, then bulls are in with a chance. If we can't, it looks like a false break, and that will be frustrating because we'll probably be trading sideways, maybe drifting lower, but nothing particularly convincing to make me want to get into trading gold actively. Let's have a look at some shorter term charts and see if there's anything that helps back up either a bearish or the shorter term bullish scenario. If you've been looking at your shorter term charts, you would have seen this rather frustrating sideways pattern here. I could draw a couple of trend lines on just to emphasize it. As you can see how we were stuck in that channel, looked like we'd broken to the downside, then we recovered. Really frustrating, not uncommon when you're in this frustrating sideways channel. I could put a trend line on there. Then we broke down and appeared to be forming yet another sideways channel. I thought, having broken down, bearing in mind the triple top pattern, that we would see a significant move to the downside. We haven't. Now, I put some trend lines on there to help you spot the potential pattern that we have here on the 1 hour chart. This could be an inverse head and shoulders, a reverse head and shoulders, a bullish head and shoulders pattern, whatever you want to call it. The trend lines here show the potential left shoulder, the head, the right shoulder. Now, this is the neckline here. We look like we've broken above it. And again, when you look at the declining wedge pattern on the daily chart, and then you look at the potential necklines and head and shoulders, bulls would have been getting very excited once we broke above 1930 on Friday, but it wasn't to be. In fact, it was the green 100-hour moving average that ended up holding gold price, and we retreated back below the neckline. So what does that mean? Is that a false break? And does that mean that the head and shoulders pattern is no longer valid? Or does it mean that it's just been delayed? Well, I think there's a good chance it's just been delayed, but I think we have to be careful before we jump into a long position. So as long as we hold below 1930, it doesn't look good for gold, and it means that we're stuck in a sideways pattern. And right now that is the case as we sit at 1925. Get above 1930, things look a little bit more positive. Maybe you want to start nibbling into a long position and just pray that we hold above 1930. Above 1932 looks a little bit more positive. If we can start holding above there, holding above 1933, we will at least have beaten the 500-hour moving average. Now, then if we can beat last week's high at 1935, and that also combines with that trend line that I put on the daily chart, I'll put it here as well. A break above these peaks really would be the confirmation that I'm looking for gold to trigger significant moves higher. How high can we go? Let's look for some targets. The first thing I'm going to do is put some Fibonacci retracement levels from the peak to trough. See if the price lines up with these levels. Beautiful. Look at that. 23.6% fib lines up perfectly. 1935. So that really is an important level in gold, that 1935 area. It is going to take a break above there to trigger what I believe would be a pretty nice buy signal. And then we could race up to 1960 quite quickly. So you can really see the importance of the 1935 area trend line, 500-hour moving average, Fibonacci level. If we do start breaking above 1935, and if you do jump into a long position in time, 1960, 1962 would be the first realistic target. Now that's one heck of a run. That would be a $25 gain. That would be really significant. But I do think we could even reach as far as the sort of 1978, 1982 area. 1982 is the 50% fib, means we would have recovered 50% of that decline from the beginning of May to the end of June. Then I'd have to reevaluate and see if we should be getting into a short position, but I won't guess now. We'll have a look and see if that happens. Let me know what you think of these ideas, or maybe you've got some of your own ideas. Put them in the comments box. Please like, share, and subscribe. And if you want the daily service, analysis and trade ideas, if you like this style of analysis, the signals, go to my website, which is daytradeideas.co.uk. And if you're trying to pass one of these funded trader challenges, I've got plenty of subscribers who are doing exactly the same thing. Forex, gold, and silver daily signals. If you want to try that, £99 a month, give it a go, and I will help you get through those funded trader challenges. Okay, thanks. I'm looking forward to your comments, and we'll see you later on in the week.